Hey friends, Kevin Goehring here, your Sacramento, Stockton area realtor and lender, here with this week's weekly real estate report. Well, let's take a look at the chart and see what is happening this week. Well, would you look at that? We have got the available homes on the market climbing. Now, it did that last year, but we peaked out and fell back off. Well, hard to say what's going to happen. You never know. But here's the big news. If we look at the pending sales right now, it is actually getting so close to crossing below the available homes. And that would be a sign of a normal market. We've got to go back 2 years before we see a normal market where the green line is above the blue line. That is normal. It kind of goes in and out, but for the most part, this green line's got to go much higher. So what is that doing to prices? Well, it's surprising. You can still see that the median sales price is still continuing to climb. But remember, these numbers represent contracts that were written probably 30 days ago. So we go back 30 days. People were writing contracts. They're closing this week. And so we're still seeing those prices go up. So that's going to be delayed. And why would we see this big climb like that? Well, I firmly believe that, and I always say buyers are pretty smart people. Buyers are aware that rates were going to start going up like crazy. They were going to start losing their buying power. So why not throw everything you've got at it and let's get into a house right now before these rates get crazy high. And I believe that's exactly what happened. That's especially true down in the lower end prices, lower end homes. I don't know how we can call a $500,000 plus home a lower end home, but that's where our median prices are. So I should say that down the median price homes, there's so much activity still happening even today. But we did see a little drop off in the median list price of homes. And so that's active this week. So that's what's going on there. So let's talk about rates real quick. Well, rates went up again this week. Pull this up real quick over here. So the average rate went to 5.3%. That's up from 5.27. So it didn't go up much, still 0.9 of a point. But let's talk about historical averages. So historically now speaking, rates at 5.3% are obviously higher than they have been because we've seen historic lows. But I went to Freddie Mac's website and you can actually pull up an Excel spreadsheet of rates going all the way back to 1971. And it's not real hard to figure out then when you get a spreadsheet with all the data that the average rate for a 30-year fixed mortgage from today all the way back to 1971 is 7.8%. That's the average, with the median being 7.45. So you're looking 7.8, 7.5% is the average, with 1.23 points up front. So we're still a long way below what is a historical average rate. And you have to kind of keep that in context sometimes. Yes, rates have gone up, but and home prices have too, obviously, from where they were. So yes, you're not getting as good of a deal today as you did a few months ago. But historically speaking, keep rates in mind. 5.3 is not that bad. So anyway, hey, but that's all I really have for this week. I hope to see you guys here next week. Have a fantastic weekend. Weather should be great. Talk to you next week. Take care. Bye.